This is the life insurance episode without a single life insurance pitch. None of us sell life insurance, so we're just gonna candidly talk about it. A similar thing, and it's called infinite banking.
Sometimes it's not a scam, but there's
So what are the difference between those two?
I've seen cases where people will get life insurance to offset estate taxes.
And which one did you guys?
We have
This is Office Hours, a tax podcast by Fujikawa and Associates. I'm Josh, one of Derek's clients, and this is Derek Fujikawa, who's a managing partner of Fujikawa and Associates. Derek, how you doing today?
good, thanks. How are you doing?
I'm good. Today we are talking about life insurance without either of us being life insurance brokers. So I guess if you ever want to learn about it without having to sit through the presentation, this could be a good place to start, and then of course continue to do some due diligence. For me, I don't have a life insurance policy aside from what's included in my work or my wife's work comp. Do you have one outside of that?
Yeah, we have one that we got a long time ago, back when our kids were born, just enough to cover our mortgage in case something were to happen to either one of us.
Okay, so I want to break down, and I feel like there's some varying thoughts. If you're ever perusing social media and looking up life insurance, there are some people who say, yes, I 100% believe in it. Other people are like, there could be other options to play on it. And so I want to have a candid conversation with you on what you think, what the different types of life insurance are, this infinite banking thing, as well as why you chose to do a life insurance policy. But break it down, Derek, real quick. What is life insurance?
If something unfortunate happened to you or someone else, say your spouse, you could buy a life insurance policy and it would pay out the face value of the policy if one of you were to pass away or die. Yeah, that's what it is. It's insurance. So say you have kids and you have a set number of expenses, you can set up a policy to cover those expenses after one spouse dies to help you maintain your standard of living and take care of everything that you need to without having to take on an extra job or anything like that.
Yeah, definitely. Obviously, if something were to happen with your spouse or yourself, that is very scary, and you don't want your family to deal with it, which is the main benefit and the main pitch of life insurance. And there's different types of life insurance. There's term and whole life insurance. Like, what are the difference between those two?
Yeah, term is really like just straight insurance. You're paying for the insurance. If something happens, the insurance pays out. If nothing happens, then you just paid for that peace of mind. You don't get anything at the end of the day if nothing happens. Like health insurance, if you don't use it, you lose those premiums. But if you need it, it's great to have, right? And so term insurance is generally cheaper because there's no added benefit to it of any savings or growth to it. You're just paying for the insurance. So it's generally going to be the cheapest type of insurance that you can get.
And the whole life insurance would be then?
It has more of a savings component built into it. So it's going to definitely be a lot more expensive, but you're going to be adding to this cash value in the policy. Depending on the type of policy, you can invest that cash value, and the type of policy will determine what that cash savings can be invested in. But what you do is you just pay a higher monthly amount, you have that insurance built into it, and then you have this other cash value that builds up over time. And then you can use that cash value to either take a loan out. It would be a loan, there's no income to you, it's not taxable, and you just have to pay yourself back interest over time and either replenish it, or if there's still a balance on that loan when you pass away, then that will just reduce your death benefit amount.
Gotcha. So essentially, comparing it to real estate, term life insurance is as if you're renting an insurance policy and you get nothing for it. That whole life insurance is if you bought a house and now you have your interest plus principal that you're paying down, and that principal is that cash value that's increasing.
Yeah, that's a good analogy. Not a straight comparison, but yeah, it's a good analogy to use. Yes.
Okay. And which one did you guys?
We have a whole life policy.
And why did you choose to go that route versus?
We just like the cash value saves the savings portion of it. And we've actually used it in the past. We've taken a small loan off of it to use for other expenses and are just paying ourselves back the interest.
Okay. So on that, taking a loan out of it during COVID, I found this guy on TikTok called Mr. Burr. Let's play one of those clips now.
When you buy a car, you should never do this. You should never buy the car with cash. You should never lease a car because then you just got a rental. You should never finance the car because then you're just paying the bank interest. Instead, you should BYOB, be your own bank. Let me show you how that works. All you gotta do is change one thing, and that's where your money goes first. Don't put it in someone else's bank, put it in your very own private bank. So what you're gonna do is take a loan from your private bank and buy the car cash. You're gonna treat your money just like you would treat the bank's money. So take what the payment would have been to the bank and simply pay it back to your very own bank. The whole time you were using this money to buy the car, the money you put into your bank never stopped earning compound interest. The interest is uninterrupted. You're paying yourself back for the car with interest, and your money is compounding, guaranteed for the rest of your life. This is what the wealthy do. To learn more, check out the Infinite Banking link in my bio for an in-depth video.
So basically, he talks about what you just did, where he is taking a loan from his whole life insurance policy, and then he's buying cars or investment properties and then paying himself. I have some
Mhm.
questions. Since you've done a similar thing and it's called infinite banking, is that a new term, by the way, or did you know that term as well?
I hadn't really heard that term around, but I hadn't heard it myself.
Okay. He's saying that you pay yourself back because you're the bank. That interest that you're paying, who makes money on that interest?
So it goes back to your own account. So you're paying yourself interest. So your account is building back up by that interest amount that you're paying yourself. In theory, it is a great way to finance, say, a car or your investment properties if you have the funds. That's the problem. Not everyone has the ability to put enough money in to be able to borrow out enough to purchase a car or an investment property. There has to be a lot of money in that cash value to be able to borrow enough to buy a property or put a down payment on a property. In theory, yeah, it's great. You can pay yourself your own interest. You're paying yourself back. Instead of paying a bank who's profiting off of your borrowing, you're paying yourself. You can then use this money down the line for something else. But again, you have to have a lot of money to make it work in that way. So if you're living paycheck to paycheck or you're just scraping by or putting a little bit away in savings, you probably wouldn't be able to do something like that, at least on a bigger scale as he is recommending.
Yeah, and then in terms of how much you can actually take out, do you know
Mhm.
off the top of your head what other ranges are? Obviously, you wouldn't be able to take out the entire amount as a loan.
I believe it's by the insurance policy. They may have a limit on a percentage of the amount that you could take out of your
Mhm.
cash value. Obviously, you can't take out more than your cash value, otherwise the policy would just lapse. But I believe you could take out, and don't quote me on this, but I think you could take out up to your cash value. The cash value gives you some flexibility too. If you
Yeah.
can't make a premium payment, they could pull it out of the cash value or keep your policy intact. Whereas if you draw that all zero in there, then you have no wiggle room anymore, right? You have to keep making those monthly payments. You lose a lot of flexibility if you draw your cash down too low.
Okay. And then you have to repay yourself. And
Mhm.
I'm sure there's some terms based off of how much you withdraw versus how long it's amortized for and what your payback period is. Like in your experience, how is interest then, or like the terms of that? Like how soon do you have to pay it off?
I believe when we did it, it was a 5-year payback, and the insurance company set the rates.
Gotcha.
So it's not like you can say, "Oh, I'm going to pay myself back 30% interest," and just crank up the value of the account. It's something that's set by the insurance company.
Okay. It does look like, I guess for me, when something comes off too easy, it seems a little scamish, right? You're like, oh no.
Sometimes it's not a scam, but there's a lot of times there's a very specific set of circumstances that make it work as well as they say it can work.
Yeah, and obviously check with your own if you're considering whether purchasing life insurance, whole life insurance, or if you already have a provider, check with them. But let's just take that 5-year example. And this is one
Mhm.
of the clips actually that I've seen previously from him is he said, like, why pay the bank 5 years when you could be the bank and pay yourself? And it just in my head, it wasn't clicking. Obviously, I'm only looking at a 60-second TikTok. So really what kind of information will you get in 60 seconds?
Yeah, yeah.
But conversations like this, where we're going for a little bit longer now to actually discover, okay, is it real, is
Mhm.
helpful.
Sure.
So hopefully, if you're a listener and you are watching this right now and this is helping you, now would be a great time to like and subscribe so we can have more fun with you on topics like this. Okay, so a few other, so I don't have life insurance myself. So as you make contributions to that, that's all post-tax dollars that you're making contributions to, yes?
Yes, yes,
Okay.
correct.
It's not like your 401k, that's all pre-tax, yada, yada,
No, not
yada.
deductible. Correct. Yeah.
All right. And then when or how are you ever taxed on these?
So on the back end, you're not taxed. So that's the thing. You don't get a deduction for the premium payments, but if it's policy on yourself, you're not going to get the money anyways. But your beneficiaries won't pay any taxes on the payouts. There are some specific cases, but in general, life insurance payouts are not taxable to the beneficiaries. So it's a good way to help set them up in the unfortunate case that you're to pass away. So yeah, they get the money. If it's $100,000 policy, they get $100,000. There's nothing that they have to take out of that.
Okay.
Yeah.
And then obviously, I guess you can't ever say, I have a policy and I'm still alive. Aside from taking a loan, there's really other way to access that value of the policy.
No, yeah, you can take out the cash value, but the face value, no. Unless you've had it for a long time and that cash value builds up to the face value, then yeah, you could just cash it out and take the money out. You'd have to have the policy for quite a while to get to that point.
Okay. And so I've had some interesting thoughts and conversations about life insurance too with other
Mhm.
investors and thinking about, is there an income limit? Is there a net worth limit to where I don't know if it makes that much sense anymore? What are your thoughts on that?
Yeah, if you don't have a lot of liabilities, maybe it doesn't make sense. Even if you are a high net worth person, I do have clients and seen cases where people will get life insurance to offset estate taxes. So right now the estate tax limitations, what, 13.5 about $1 million. So not a ton of people are going to be in the estate tax realm, but if you are, you could buy a life insurance policy on yourself, term life insurance maybe, to keep it a little less expensive. And then say you calculate your estate taxes are going to be about, say, $2 million. You buy a $2 million policy on yourself. Then when you die, that policy will kick in, pay out $2 million tax free, and you can pay your estate taxes with that so that your heirs can get your full estate without having to sell assets in order to pay their estate taxes. So it's not quite as simple as that. You get to set up trusts and things like that, but there's ways to do that where you can structure your estate to pass on without having to sell assets.
Okay. 'Cause that's another thing that I thought too. It seems like, at least with the ads and
Mhm.
being on the marketing side, ads
Sure.
are meant to then target at least the general population for a mass market project or product like life insurance.
Mhm.
Even better if you can make a specific ad for those high net worth people. That'd probably be a really
Yeah.
good ad if you're an insurance company. I'd think about that now.
Smaller market, but yeah, it's a much bigger policies that you'll be selling.
Yeah. Okay. But thinking about it, let's just say $1 million policy, which seems a very normal amount that
Mhm.
most people would want to look at. I guess the back of my mind was, okay, I could buy $1 million policy, and I guess I'm young and relatively healthy, so I don't think it'd be that expensive. Or could we stack a couple decent enough investment properties that then, if they sold off a couple, would that still give a similar amount of benefit? Or am I thinking about it wrong?
No, not necessarily. I mean, yeah, you could look at investments and try and basically self-insure yourself, right? Create an investment portfolio that you have designated as your life insurance policy, where these assets are going to be sold upon your death and used to cover other expenses. It's a little harder. Insurance, you have $1 million, right? You die, you buy $1 million policy, you die, you're going to get $1 million. Investment, you have to make some projections and use some assumptions and say, if it grows at X% a year over 20 years or whatever, it's going to be this much and you'll have $1 million. And maybe you'll have more, maybe you'll have less. It's not an exact science in that way. You just have to weigh the risk of, do you really need that $1 million, or can it be a fluid number that may change from year to year?
Yeah, no, that's fair. Yeah, that's a conversation I've had with a lot of our investor friends. Obviously, I guess what I'm talking about requires a lot more activeness. Real
Yeah.
estate is very
Insurance, you just pay
active.
every month, and yeah, there's no work involved at all. Whereas, yes, you will have a lot of work with real estate.
Yes.
Yeah, but you will have also current income with real estate too.
Yeah.
Yeah, again, you got to weigh everything and decide what's best. It may be worth it to just pay the insurance and not have to worry about it.
That is true. Yeah, because identifying rental properties and trying to manage
Mhm.
them and doing that
Mhm.
over decades, because that's really how
Yes.
long it takes.
Yeah.
At that point, it'll work out as a great insurance policy. We're 100% talking about that with people who are doing more active things. And yes, if you want the least amount of effort, life insurance seems like a decent option to consider at least.
Yeah. And again, you have to look at it long term too, right? If you're in your 30s, even 40, if you're younger and you want to do all this, great. But if this is something you're going to hold for 30, 40 years, are you going to still want to be managing all these properties when you're in your 70s, 80s? So yeah, you have to look at it on a long term basis too. Like in life insurance is you just make the payments and you're done for however long you hold the policy. Whereas you're going to have to be managing these things for as long as you're holding them. Not that it's a bad thing, but just you have to factor that in if that's something you don't want to do all the way until you die.
Yeah, no, that's a fair consideration. And I think this is why hopefully this conversation between us right now in this episode is important, because I feel like
Mhm.
obviously having a financial advisor like a CPA is also extremely important, but also just
Mhm.
being in the room where people are talking about how they're thinking about structuring their finances, planning for their family doesn't happen too regularly.
No.
It's not a usual backyard barbecue topic. I guess depending on the barbecue.
Yeah, there's a lot of people out there. There's a lot of methods to do it. And I'm not saying anyone is better than the other necessarily, just a matter of what works best for you individually.
Now, Derek, any last kind of advice or notes you want to leave about life insurance at all for the audience?
Just what I said just now. It may not be for everybody. It's always a good conversation to have just to see if it's something that might be useful for you. And I wouldn't say everyone needs to get life insurance, but everyone should probably at least look into it and see if it's necessary. And then if it is, if not, then not an issue either.
Yeah, there's a lot of different vehicles out there, which is also what makes it harder
Yeah.
picking a show on Netflix. But if you would like to have a candid conversation about your own financial strategy and your planning, like I just did with Derek right now, I will leave a link to Derek's calendar to book a consultation with him down below in the description. And so you can reach out to him. And if you want more conversations like this, make sure to hit subscribe as well. Derek, I appreciate you jumping on and sharing your experience.
Yeah, no problem. Thanks.
All right. And if you want to see an episode about how to pay for your kids' college, you can click another video. I'll leave it either up here or also link down below, and we will see you in that
Sure.
video. Thanks,
All right.
guys.